Ever wonder how a massive agricultural company, navigates all the unpredictability, weather, markets, and still manages to grow?
It's a constant challenge, isn't it?
Well, today we're going to dig into exactly that. We've got some fresh numbers just out today, August 6th, 2025.
Right, from Bayer CropScience Ltd.
Exactly. Detailing their performance for the first quarter, the one that ended June 30th, 2025.
Mm-hmm.
So our mission here is, well, to cut through the financial jargon,
Yeah, unpack the key figures.
figure out what really drove their performance and what these results might signal about the wider agricultural scene.
And we're looking directly at their official release, the financials,
Mm-hmm.
the whole package.
Yeah.
And what's really interesting, I think, is getting this early peek into their financial year 2025-26. It's just Q1.
Right.
But it raises that question, for anyone watching this sector. What do these first numbers tell us about the health, the direction of this ag-rid giant?
Okay, let's unpack it then. And here's where it gets, well, really interesting right away.
The top line.
Yeah, revenue from operations for Q1 FY25-26. It hit 19,146 million.
Wow.
That's nearly 20 billion rupees in just 3 months.
And to give that some context, Emery,
Yeah.
if you compare it to the same time last year, FY24-25,
What was it then?
it was 16,314 million. So you're looking at a, 17% jump?
17%. That's substantial.
It really is. It's not just a small increase. It shows a very clear, robust upward trend. Strong demand, seems like.
And the good news kept coming on the profit side too, right?
Profit before tax, 3,352 million.
Which was up from last year's 3,158 million.
Right. And the CFO also made a point of highlighting a 10% increase in profit after tax, Patty.
Okay, so good sales and better profit margins.
Well, connecting the dots, it suggests more than just good sales figures. It points towards effective operations.
Managing things well.
Exactly. Maybe some pricing power in there too, possibly. In a market that can be pretty volatile.
True.
It's a strong signal, I think, of healthy financial performance really hitting the bottom line.
And these numbers aren't just pulled out of thin air. They were officially released today.
Right. After the audit committee reviewed them, board approved, and importantly, the auditors, Deloitte, Haskins, and Sells, did their limited review.
So pretty solid figures.
Yeah, definitely.
Okay, so impressive top line, good profit growth. It leads to the obvious question, why? What was driving this? Their CEO, Simon Vibush, he pointed to some specifics.
Yeah, he did. He attributed that big 17% revenue growth mostly to higher volumes.
Volumes of what?
Specifically corn seeds and their big herbicide Roundup.
Ah, the key products then.
Exactly. Indicates they really met the demand. Successful selling in those absolutely critical product lines speaks volumes about their market position.
But it wasn't just product volumes, was it? There was an external factor, too.
Oh, yeah, the monsoon.
For early onset of the monsoon played a role. And for an agribusiness, that's huge, isn't it?
Absolutely massive. A timely, maybe even slightly early monsoon that likely created almost ideal conditions for planting.
Right across the country.
Pretty much, which in turn just directly fuels demand for their seeds, their crop protection products, everything.
So like a natural tailwind.
Perfectly put.
Yeah.
It lined up perfectly with their sales push, letting them really capitalize on needing those higher volumes.
And innovation was mentioned too?
Yes. The launch of Bakota.
Right. That new solution for stem borers, the pest that hits rice crops.
Exactly. Paddy cultivation nationwide. This launch, it's more than just a new product on the shelf.
Strategically important.
I think so. It signals their focus, their commitment to supporting smallholder farmers, bringing these very targeted, innovative solutions for specific problems.
Which is vital for long term.
Yeah, for growth, for staying relevant.
Okay.
These specialized products can grab significant market share in areas that maybe weren't well served before. It helps the farmers, helps their bottom line.
Makes sense. Okay, so sales were strong, driven by volumes, weather, and innovation. But let's flip to the cost side. The CFO, Vinit Jindal, mentioned some dynamics there. What did he say?
He did note that operating expenses were up. Elevated was the word used.
Why was that?
Again, partly tied to that early monsoon. Often means things move faster, logistics costs tick up, that sort of thing.
Okay.
But importantly, he also stressed their, quote, unwavering focus on cost discipline.
Trying to keep a lid on it despite the pressures.
Exactly. It's that balancing act, right? Managing expenses effectively even while revenues are climbing, that's what helped deliver that 10% PAT increase.
That makes sense.
And he also mentioned sort of early signs that input costs might be stabilizing.
Which would be good news going forward.
Very positive for future margins, yeah.
If we glance at the detailed statement,
Yeah.
just briefly, you see where the money goes. Cost of materials consumed, that's huge. $10,395 million.
Yeah, it's a very material-intensive business.
And then other expenses at $2,914 million. Gives you a sense of the scale.
It really does.
Yeah.
But despite those higher operating costs you mentioned, the overall picture is still healthy. Profit for the period, $2,787 million, and earnings per share, EPS, 62.01 for the quarter.
So managing the levers well.
Seems like it. Converting those strong sales into actual earnings per share.
Yeah.
Efficient management.
Now, there's a really important point the company made. A bit of context we need to remember.
Ah, the seasonality.
Exactly. Their business is seasonal. So these Q1 figures, they aren't necessarily indicative of the whole year.
Absolutely. Critical point. And it raises a question for you listening. How does a company like this manage expectations, financial planning, around something so inherently seasonal?
Right. You can't just multiply by 4.
Definitely not. You have to look at performance within the agricultural cycle. Understand how they strategize around those peaks and troughs.
Okay, so let's try and pull this together. Quick summary.
Oh, good.
Bayer CropScience Ltd. They've kicked off their financial year, FY25-26, pretty strongly.
Robust revenue, robust profit growth.
Showing they're managing well in what's always a dynamic market. And this strong Q1 performance, it looks like it was mainly driven by that impressive volume growth in key products.
Corn seeds, Roundup.
Helped significantly by the early monsoon.
A big natural boost.
And also boosted by new stuff like Buck Cody.
Right, the innovation factor.
And all this, despite those operating expenses being a bit higher, again, partly due to that seasonality.
A pretty clear picture for Q1.
Yeah. So as you're processing all these numbers, maybe here's something to think about.
Okay.
Given how much weather patterns like the monsoon clearly influence these companies,
Hugely.
how might future climate trends, maybe more extreme weather or maybe even big improvements in weather forecasting, how might that reshape the financial planning, the strategies of companies like Bayer?
That's a great question. What happens if early monsoons become the norm? Or the opposite, more frequent droughts?
Right. And what's the long-term impact of successful new launches like Buck Cody? How does that shift their trajectory and maybe even the wider farming landscape?
Lots to think about there, beyond just the quarterly numbers.
Definitely. Well, that was our deep dive into Bayer CropScience Ltd's Q1 FY25-26 results.
Hope you found that useful.
We hope you feel a bit more informed and maybe just a little more curious about this fascinating and really vital world of agribusiness financials.